Ladies and gentlemen, good day and welcome to the DigiKore Studios Limited H1 FY26 Results Conference Call hosted by Equibridge Advisors Private Limited. As a reminder, all participant lines will be in listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need an assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand over the conference to Ms. Ruchika Shah. Thank you and over to you, ma'am.
Thank you and a very good afternoon to everyone. Welcome to the H1 FY25 earnings call of DigiKore Studios Limited. From the management team, we have with us today Mr. Abhishek Moore, Managing Director and Chief Executive Officer, Ms. Henny Pahuja, Company Secretary and Compliance Officer, and Mr. Rakesh Nikalje, Chief Financial Officer. Before we begin, I would like to mention a brief disclaimer. This conference may include certain forward-looking statements which are based on the current views and expectations of the company. A detailed disclaimer is available in the investor presentation that has been uploaded to the stock exchange. With that, I now hand over the call to Mr. Abhishek Moore for his opening remarks. Over to you, sir.
Thank you. Thank you, Ruchika. Good afternoon, everyone. And on behalf of the entire management team at DigiKore Studios Limited, I extend a warm welcome to all our valued shareholders, analysts, partners, and friends joining us today for DigiKore Studios H1 FY26 earnings call. Thank you for your continued support and belief in our journey. Your encouragement over the last year has mattered enormously to us. I want to open with a simple thought that guided our team throughout the toughest stretch the global content industry has seen in years. Tough times don't last. Tough teams do. That mindset, combined with disciplined execution, has powered a sharp rebound for DigiKore Studios. Over the next few minutes, I'll cover 4 arcs. The VFX industry's comeback and why the runway ahead looks especially strong. So DigiKore's blockbuster FY26 performance and what's driving it are strategic levers, including the upcoming 45 crore rupees QIP, our global client approvals, and our sales push in the US and Europe. And finally, how we are future-proofing the company with AI tools, virtual production, branded content, and SaaS, so that we play offense regardless of how technology shifts the industry. So first, the industry context. The Hollywood writers and actors strike created an unprecedented pause. Obviously, that was a rear-view mirror, and the rear-view look is behind us now. Productions have restarted, green lights are flowing, and content calendars are rebuilding. Multiple independent trackers now point to sustained growth for the effects and production technology stack over the next 5 years. For example, one recent market view pegs animation and VFX at a 12% CAGR through 2030, underpinned by streamer demand, real-time pipelines, and cloud rendering. Within this, virtual production is expanding even faster, with estimates ranging from 18% to 33% CAGR for virtual production by 2030, reflecting the shift to LED volumes and on-set visualization in real worlds. Add to this the continued rise of streaming spend and multi-season episodics, you have a medium-term environment that is not just recovering but structurally expanding. So against that backdrop, H1 FY26 for DigiKore Studios was about turning momentum into metrics. Let me summarize the headline numbers year-on-year versus H1 FY25. So versus H1 FY25, total revenue grew 59.6% to 36.13 crores compared to 22.62 crores in H1 FY25. PAT increased 117% to 6.11 crores versus 2.82 crores in H1 FY26. We worked really hard on our expenses side, and as a result of that, our expenses, operating expenses as a percentage of revenue, fell to 78.6% from 83% an improvement of 440 BPS on a mixed utilization and cost control. And also, very importantly, operating cash flow turned positive and strengthened on better profitability and collections. So these are not just good points. They reflect a business that has moved from recovery into profitable growth. What powered this? Let's look at the three flywheels that powered all of this. First one, no-brainer, a stronger demand cycle. As production resumed, we converted pent-up demand into delivery, especially in episodic. Today, 80% of our revenue is episodic, which provides pipeline visibility, seasonality balance, and more consistent cash conversion relative to one-off bills. As one of the premier and older studios, we never had a problem of getting work. It was, when there is no work because of the strikes, that it did impact us. But when there is work, we are right at the forefront. We are very well known, extremely good goodwill across the, industry. So as the demand has come back post-strike, we are right in the front and we are able to, bring in substantial amount of work. A sharper client mix and approval. So we are among a handful of India origin VFX studios that have been audited and approved by TPN, Disney, Marvel, Netflix, Amazon, Paramount, Warner Brothers, Lionsgate, Legendary, CBS, HBO, and several other production studios in US and Europe. So this deep bench of approvals is a strategic moat. It shortens sales cycles, improves win rates, and supports direct work. As a company, we are working extremely hard towards moving towards more of direct work compared to outsourced work. This year, we'll have achieved almost 50-50 ratio, which is 50% direct work compared to last year, which was only 20% direct work. And our goal over the next year, that is by the end of FY27, is to be at 80% direct work, and we are moving in that direction pretty well. The third point that has powered all of this is the sales intensity and space time. In H1 FY26, we completed 100 plus in-person and online meetings with existing and potential clients across the US and Europe, enhancing visibility with networks, streamers, and production houses, and supporting a higher quality recurring pipeline in episodic work. We are today sitting in an order book of over 20 crores, and we'll definitely keep this momentum, more meetings, more demos, more wins, because it's a no-brainer. Face time with decision makers is converting into work, and that's the rule of the game. Let me spend a moment on geography. Europe is a top priority of ours right now. The region is scaling capacity and virtual production infrastructure, and our recent mega sales drives across Los Angeles, London, Paris, Madrid, Glasgow, and Edinburgh have translated to tangible outcomes, new vendor enrollments, active bids, NDAs, and award momentum. This is not just activity. This is pipeline conversion, and is directly tied to our H1 step up and into a healthier H2 outlook. Our team also recently participated in the View conference in Italy, which was literally 15 days ago. And we are now again planning a new road show in the first week of December, which will aggressively cover Europe again, which will be covering London, Spain, and Germany. So we're going extremely aggressive on Europe, and we are getting the results already. To be closer to the decision makers, we have, so this is another important thing. Our board we've just got approval, and we are working towards establishing a subsidiary in New York, basically to anchor North America growth and response time. So that paired with an accelerated Europe strategy is already delivering, and we are seeing the difference. On capital and balance sheet, again, a very important part of any business, we will be completing our 45 crore rupees QIP fundraise in November. So this is designed to give us additional working capital flexibility to scale delivery, invest in on-ground market presence, accelerate high-margin initiatives, and strengthen balance sheet by certain loan reduction, partially from the QIP fundraise. Combined with our recently completed 1:1 bonus issue, it signals confidence in the multi-year value creation path that aligns our capital structure with growth. Following the QIP, the promoters also intend to infuse rupees 20 crore via convertible warrants. So this signals unambiguous promoter confidence in DigiKore Studios' growth trajectory and creates skin-in-the-game alignment with all our shareholders. Now I want to bring you to a critical theme, which is building for tomorrow while executing today. One of the biggest secular shifts in the world in is rapid advancement of AI across industries, including content creation and VFX workflows. In fact, I had a very interesting conversation this year. On Sunday, I was at a meet where we had Mr. Shashi Tharoor as one of the speakers, and I had an opportunity to interact with Dr. Shashi Tharoor as well. And he was also, talking about the advancements in AI and how that could be a threat to across industries. And, we were also concerned about the VFX. But, we are not just spectators to that change. So we are building for it. As we shared in prior calls, DigiKore has been investing in AI-assisted roto, cleanup, match move, tracking, and QC, and in proprietary SaaS-based platforms that can be monetized beyond our internal pipeline. This isn't a hedge. It's a springboard. If AI reduces unit economics for certain task categories, we intend to be the ones who own the tools, pass productivity gains to clients, and still expand margins through speed and scale. That is why we say DigiKore Studios is the only VFX company in India preparing for this aggressively for the future if AI were to affect VFX revenues. So because we plan to lead that curve and not chase it. Alongside AI, our virtual production asset strategy has advanced. Virtual production is not a buzzword. It is workflow revolution, pre-wills, on-set, visualization, and digital environment that collapse time and cost. Like I mentioned earlier, the global VP marketplace is projected to compound at anywhere between 18 to 30% CAGR this decade. And we are positioned with Unreal Engine-based asset creation that can be reused, extended, and licensed across shows. Let me speak to you a little about our 4 operating verticals, each of which have delivered substantial growth in H1. VFX, which is our core, strongest half since pre-strikes on episodic strength, client approvals, and direct work share rising. Branded content. Well, I'm happy to let you know that season 2 of Kaise Banta Hai and season 1 of our new show Heroes is now streaming on Jio Hotstar. In fact, it just went live last week. So another huge win for us. And we continue to generate meaningful revenue from IPs and formats that can be monetized across platforms, regions, and syndication windows, creating non-linear upside beyond service billing. AI, SaaS, and services. Our in-house team is productizing workflow accelerators and exploring external licenses, an emerging P&L lever, and a strategic hedge. So AI SaaS products are not something which will give us returns in the short term, but in the medium to long term, they could be really propelling the company into its next future. Virtual production assets are expanding library, stronger reuse economics, and growing client traction in the US and Europe. More importantly, our VP asset library is already monetizing on Unreal Engine's Fab.com, and we are seeing growing revenues from Fab.com month on month, which is a great sign. So this is something which we've already invested in, and now we are bearing the fruits of that investment. A special word on our hybrid brand jingles business. I do believe strongly that this could be one of the revolutionary products or services that we have at DigiKore. We have seen exceptional traction in India. We're already getting lots and lots of orders on a daily basis in India for our hybrid brand jingles. We've recently expanded into UAE, and we've already started receiving orders from UAE, and will soon be opening up the US and UK market very soon. This is a nimble, high-velocity vertical that builds brand equity for clients and operating leverage for us. So we actually see this contributing meaningfully over the next few quarters, that is brand jingles. Before I conclude, let me restate the H1 FY26 proof points in the simplest terms. Revenue is up 59.6% compared to H1 FY26. PAT is up 117%. Operating expenses down 4.4%. Operating cash flow has turned positive and strengthening. Multi-region sales drives converting to awards and order book visibility. A 45 crore QIP to accelerated growth while we stayed disciplined on return on capital. Promoter warrants of 20 crores. And the company is not just executing the current playbook, but writing the next one across VFX, branded content, AI, and virtual production. Let me close with 2 thoughts. First, our culture. During the strike period, it would have been easy to shrink and to play defensive. Our team chose to lean in, sharpen cost lines, increase direct client engagement, invest in technology, and step up our presence in the US and Europe. So that is why when demand returned, we were first up the curve. As Peter Drucker put it, the best way to predict the future is to create it. We intend to keep creating it deliberately. Second, our promise, we will continue to communicate with transparency, execute with discipline, and allocate capital with prudence. We are committed to sustaining 30% plus CAGR over the next few years, supported by industry tailwinds, our sales engine, technology leverage, and a sharper client mix. The windshield is large and bright. The rear view mirror is small for a reason. On behalf of the whole leadership team, thank you for your trust in DigiKore Studios. We are excited about H2 and beyond, and we look forward to updating you on continued wins in VFX, growth in Europe and North America, and the scaling of our branded content, AI, and virtual productions initiatives. With that, we will open the floor for questions. Thank you.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use a handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Garvit Jain from Seven Island PMS. Please go ahead.
Hello. I hope I'm clearly audible, sir.
Yes, absolutely.
Yeah. So, sir, my first question is, I wanted to get some idea on the guidance that you have given for FY26 to 28. So what is giving us such a confidence for such a strong guidance, and what is going to drive this visibility of up to 100 crores of revenue by FY28, sir?
Right. Thank you. Good question. So, see, if the strikes weren't there, we would have probably achieved all of this 1 year earlier. With the strikes disrupting business completely, that led to a, so you can say, a 1 year shift completely in our guidance. In FY24, we did 48 crores revenue. It was very natural shift for any business at that stage, which is already approved by so many players, including Disney, Netflix, Marvel, to look at that growth. Now the guidance we are able to give, because the VFX industry is back, the work has started, it's business as usual. We are growing aggressively in Europe, which was a market which we hadn't grown very, very aggressively earlier. What has also happened is that because of the strike, several VFX studios across the world have shut down. Now what has happened is that the work has come back. So, and the work has come back with a bang, because there is a pent-up demand when an industry shut down for 9 months, 12 months. So the pent-up demand is there with fewer players to service that pent-up demand. So the players who survived like us definitely will benefit from this, because the pie has increased and the eaters of the pie have reduced. So whoever has survived will get a larger piece of the pie. And with the industry back, that is one. Two, with our verticals, which is branded content, brand jingles, AI platforms, and virtual production assets firing, and all of them firing literally from H1, we are extremely confident of the guidance that we provided.
And sir, can we expect that H2 is going to be better than H1 in terms of the revenue and part? Because we had guided for like 11 crores of PAT for FY26. And out of that, 6 crores is already achieved. So can we expect that H2 is going to be better than H1? And is there any changes in the guidance that you have given, sir?
So as of now, see, we don't want to sit changing our guidance every 1 month. So let's stick to the guidance. But there is a good chance we will beat that because of the H1 performance.
Okay, so H2 we can expect to be better than H1, right?
We are doing our best, because now that we have a strong H1 and a strong base, there is no reason why we should have H2 lower than H1. So technically, if H2 is better than H1, which is already anticipated, FY26 guidance will definitely be better. Results will actually be better than our guidance.
Oh, okay. And sir, speaking of AI, so could you help me understand more elaboratedly that how AI plays a key role in VFX, and like how do we apply it into the business, and everything about AI which makes it good for VFX?
So technically, AI does not make anything good for VFX. it only helps us a little in improving our productivity by, let's say, there are certain manual tasks which we do in our production pipeline, and we are able to use AI to improve, because let's say 3 people spend 5 days to do a certain job on the back-end side, AI is able to get that done, let's say, by 1 person in half a day. So those are tools. As of today, international streaming platforms, international production companies like Netflix, Amazon, Disney, Warner, Marvel, they are yet averse to using AI in content production. So AI will never disrupt VFX. In a sense, it will directly disrupt content production. So it's not only going to affect VFX, it will affect the entire chain of how content is made. I don't know how many of you have seen the Mahabharata that has come on Jio Hotstar recently. The whole series is made in AI, right? The whole series is made in AI. So there is no question of VFX being disrupted. Everybody from actors to light people to technicians to, studios, nobody earned money on there except, the software tools that made it, okay? So it disrupted the entire filmmaking process only. As far as we just recently signed another contract with HBO, and the contract right now says that you will not use AI in bold letters. In India, we are not as scared about, copyright issues and copyright claims and things like that. But in the US, when a Netflix or a Marvel or a Disney makes a project, they don't make it in a few $100,000, dollars. They make this and millions on that. And I was also recently on one of my calls, I said I was with the head of VFX at Amazon. I was having lunch with him. And they are not yet ready to use AI in their production pipeline, in the actual, what we call a generative AI, that is creating images or creating videos using AI, because they are extremely scared, extremely conservative of copyright. In the US, one copyright claim will suddenly lead to $20, $30, $50 million of suing, So it is yet some time for content to be generated in AI. As of today, I do definitely believe that AI content generation tools that are available will provide a huge boost to the creator economy. That is, individual people who want to create content, put it on YouTube, put it on other platforms, maybe the smaller OTT platforms in countries like India, they may use AI to create content by itself, like how Jio Hotstar has released Mahabharata. So all that will come, but our primary market, which is US and Europe and the large production studios, they will not be using AI for some time. At least that's the hint and, information we've got from them. So for the short term or medium term, we don't need to be really worried. And we can't even use AI ourselves in VFX because that is completely banned because of the potential copyright claims that could arise from there. So currently the AI that we are using for, improving productivity, that's at the back end, not on the front end and generating images.
Okay. Sir, a request to you, आपका थोड़ा सा buzzing is there from your end. If you could please speak a little clearly, will help me a lot.
Okay,
I have 2 more questions if I can. So one is I wanted to ask you about the order book. You have guided that we have 20 crores plus of order book currently. So how much more is in the pipeline? What type of projects are we taking up for VFX? And if you could tell me about top 5 clients which we are working with currently.
Just a second, I'm just going to bring up a big pipeline now that you mentioned that question. I hadn't really prepared for that, but I have that figure in front of me somewhere because I keep looking at that every day. Yeah. So our order book currently, like I said, is around 20 crores. When I say order book, that means in order book, there are 2 kinds of orders that we look at. One is, let's say, if I'm doing a Netflix series and, it's an 8-episode series and it's going to go on for 6 to 8 months, obviously that's a part of our order book pipeline. And second is the commitments that we have received from our outsourced partners that, hey, over the next 3 months, we are sending you so much work, because we know these people, they do send us 4, 5, 7 crores, 8 crores worth of work every year. So, everybody is now getting so busy that the people want to block capacity. So we started getting emails from our existing clients that, hey, we have this project coming up, the value is this much. We are sending it to DigiKore. Please keep your team ready during this period to this period. So order book is a mix of outsourced clients and direct projects. Coming back to outsourced clients, we normally don't like to, name them because of confidentiality issues. But in terms of direct projects, we are getting, so our top 5, and we are getting direct projects from Netflix. So Netflix, HBO, CBS, and we are just now talking to Marvel for a large project.
Okay. And can you quantify any number and how much of the pipeline can we expect?
So currently, we have almost, I don't have the exact figure, but if you ask me bidding, what is in bidding, we have over, 35 crores worth of projects in bidding. Obviously, we don't expect to get all of that.
Okay.
Yes, but if you were to get in the next 1 month even 10 crores of that, because the bidding pipeline is constantly evolving. We're getting bids every week. Every week our bidding has gone up, and our bidding team is in fact scratching their heads now because they haven't done that for the past 18 months. But yes, so that's a good sign. So our bidding pipeline is pretty strong. And, there's no reason why we shouldn't be able to achieve at least, 8 to 10 crores on a very conservative side of this 35 crores that's currently in bidding.
So you're saying that we can turn 8 to 10 crores into order book out of the bidding pipeline?
If I want to go on a conservative side, I definitely, there's a good chance we'll get more than that, but on an absolute conservative side of our current bidding pipeline. See, our bidding, like I said, we are bidding every week. If you ask me, after 4 weeks, we'll probably have, some would have got awarded out of this 35 crores, some would have got rejected, and a new bidding pipeline would have generated by then in the next 1 month's time. So, as of out of the current bidding pipeline, I'm estimating on a conservative side, 10 crores, 12 crores should get awarded.
Okay. And so, if you could tell me what type of projects are we bidding for, particularly bidding pipeline, the major portion is of which type of project?
Oh, it's episodic. Our major thrust is episodic, and we are also pretty aggressive right now on indie films, not on the large, because, we don't bid, and we don't even become eligible for a large Marvel movie directly. But yes, our focus is a lot on indie films. These indie films are great. They typically have around, 2 to 4, maybe 5 crores worth of VFX. The directors and the VFX supervisors aren't as, pixel perfect like a large Marvel movie. And it works out pretty well, and they're very profitable, the indie films. Plus, we get tax rebates from India. We've just applied for tax rebates for one of our HBO projects. And indie film, obviously, the indie film tax rebates is what we are going to get in our pockets. The HBO tax rebates will go to HBO for their project. So, and the tax rebates obviously is a massive magnet right now to attract work, because when the producers are going to give us, let's say, a 2 or 3 or 4 crore rupee project, and that's already a massive saving compared to US and European rates. And on top of that, they get back 22.5% of the work. It's great. The only thing is that when we get a project as our, subsidiary, we are not able to claim tax rebates for that, because as per the tax rebate laws in India, a subsidiary or so upward or downward. So let's say if I am a subsidiary of, a foreign company, or the foreign company is my subsidiary, tax rebates are not applicable for that. Tax rebates are applicable only for a direct client order that comes to a direct Indian company. So they do not allow tax rebates. So, but yeah, most of our Canadian work is non-tax rebate, so that doesn't make a difference. Whenever there is a tax rebate situation, we take the order directly into DigiKore Studios India.
Okay, got it, sir. And one last question, sir. If you could please help me understand how are we different from our peers and what makes us better than them?
मैं इसका जवाब हिंदी में दूं?
Sorry?
मैं इसके जवाब हिंदी में देता हूँ. There's actually a good thanks to our diversification and the moats that we've created. I would like to say कि बाकी सब चावल बेच रहे हैं, हम बिरयानी बेच रहे हैं.
Okay. Okay. Thank you, sir. That's all from my side. Thank you.
Thanks.
Thank you. The next question is from the line of Shaurya Punya from Arjav Partners. Please go ahead.
Hi, am I audible?
Yes, Shaurya. Hi.
Hi. So I wanted to know, is there some sort of seasonality in a business, like H1 has more concentration of revenue than H2?
Earlier it used to be very, very honest, and not really a seasonality caused by anything else, but seasonality caused by the Thanksgiving in the US, or seasonality caused by the Christmas break in the US. So, historically we've always seen that, from Thanksgiving, I don't know if you ever work with US and US clients especially, for Thanksgiving के बाद उनकी छुट्टियां ही चालू हो जाती है दिसंबर एंड तक. Typically, they consider that my holidays have started. This year, because of the massive, bang and comeback of the VFX and a massive pile-up of VFX work, we don't anticipate, even if they go on holiday, we anticipate them overloading us with work and going. Hopefully that should be the situation. Because we are seeing that, right? There are a lot of projects coming up. Everybody has deadlines. Somebody has deadlines of February. Somebody has deadlines of March. And if these people vanish for one and a half months, we only won't meet those deadlines. So I don't anticipate such a major, holiday period this year because of their own deadlines set by them. So I don't think we will face that seasonality this year, hopefully. But normally H2 is, in normal circumstances, this, December period and up to half of Jan is always very slow. But I don't think that should happen this year because of the volume of work we are seeing right now.
Because last year you around 36 crores of revenue had for the entire year, and this year in H1 only you have almost made that. So since you're saying that you grow at 30%, so doesn't that make H2 very weak?
So last year and this year is not about we did last year 36 and H1 33. Last year's 36 was a result of the strike. That was a massive dip in revenue. See, if the strikes weren't there, after FY24's 47-48 crores, we would have gone to 65 crores automatically in FY25 if the strikes weren't there. That was a natural growth process for us. Now, assuming because of the strikes we had a dip and now we are growing naturally, don't keep our base as 35 crores, keep it as 48 crores because I would like to consider that as our base in a normal year. Now that we have come to a normal year situation. So, growing from a 47-48 crores to a 60-65 crores is a normal, growth for a high growth industry.
Okay.
So 35 crores was a normal industry situation. It was a strike here. There was hardly any work at that time.
Okay, sir. So one final question, what's the view regarding margins? How do we see our margins going forward?
See, VFX margins, like you've seen, they've shrunk a little now because, everybody in the market right now, tiger. सब भूख से मरे हुए 12 महीने से 18 महीने से, they're all hungry. So, we also did have to cut down a little on our margins to win some projects because you can imagine, right, when you've not got work for 12 months, 18 months, whatever comes you want to eat at that time, whatever rate it is. People were cutting rates. We did see a small margin in H1 compared to our typical margins of 18-19% PAT margin. Going forward, I anticipate VFX to settle in the same range of 16 to 18%. But our other divisions, which are extremely high margin divisions of brand jingles or SaaS-based platforms or VC sets monetization, I do think we should be able to start pushing up our margins slowly over the next few quarters with a target of, touching again 20-21%, maybe 22% PAT margins over the next 3 to 4 quarters, backed by, the high margin businesses, gaining traction.
Okay, got it. Thank you, sir. Thank you.
Thank you.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. A reminder to all the participants that you may press star and one to ask a question. The next question is from the line of Pradeep. Please go ahead.
Good afternoon, sir. Sir, the other current asset has increased basically significantly. What is the other current asset, reason behind it?
Oh, the other current asset, let me just open the balance sheet so that I can answer it properly rather than just a shot in the dark. So if you see, I'm just going to the balance sheet. One of the things in the other current assets is obviously our WIP that we have. That is your stock. In normal production, you would call that stock. In services, we call that WIP because of the uptake in the projects that have come up. So as it's like, when a manufacturing company only gets lots of orders, your stock also increases, no? Deliverable stock. Delivered products ready to be delivered.
Okay. And trade receivables have further gone up, basically. When do we see it to be controlled?
I would like to beg to differ out here. In fact, the trade receivables have, if you look at our trade receivables of March 31, they were for 39.55 crores.
Now it has gone
46, but look at the revenue, how much it has gone up. Technically, if we were faltering on trade receivables, we should have crossed 60. But we have actually gained on trade receivables in the H1. We've actually collected substantially from past projects and new projects. And that is why even if we booked, top line of 33 crores, our trade receivables have only gone up by 6 crores, 7 crores. So actually, we have gained substantially on trade receivables. And over the next 6 to 9 months, we should have recovered a majority of the past trade receivables because now the VFX studios worldwide are getting work. Their cash flows are getting better. But ऐसे नहीं होता. You can't just have in 2 months if I get work, I'm going to clear off 6 months of pending payments to people. So we anticipate over the next 6 to 9 months, a lot of our pending trade receivables will be recovered. We've already started recovering. That can be seen from the current. In fact, our debtor days, if you look at it, has come down from 400 to 200 approximately. If you do a calculation of that, so that gives you a sign that our trade receivables have improved, not gone up.
So, any chance of any of this trade receivable going impaired?
So as of now, we don't have signals from anyone. As of now, all of them are yet giving us work, paying us, whatever little bit on a monthly, weekly basis, the past dues. See, somebody going bankrupt is not in our hands. No company is going to tell their vendor that, we are going to go bankrupt. वो तो अगर किसी को जाना है, they will just declare it. They won't even tell us. But as of now, we don't have time. Unless somebody who owes us money goes bankrupt, that is the only time we will have to write off that amount. But if none of our clients, which doesn't look even remotely right now, going bankrupt, because the VFX industry is back now. Whoever had to go bankrupt went bankrupt late last year, early this year. So we honestly don't foresee bad debts from this as of now.
Okay. And sir, one more question. The last time, around 1 month back or so, order book was 27 crore and now it has reduced to 20 crore.
They also invoiced maybe a month and a half back, but then that also invoicing for September happened in that now.
Okay.
Order book translates into invoicing also. So a portion of that has also got invoiced in September.
Okay. Okay, that's all, sir.
Thank you.
Thank you. The next question is from the line of Vijay Patil. Please go ahead. Hello. Mr. Vijay Patil, kindly go ahead.
Mr. Patil, are you there? I think you can drop Mr. Patil because Ruchika, are you there?
Yeah, and there's a chorus team. Please drop Mr. Patil.
Next question is from the line of Mudit. Please go ahead.
Hello, sir. Am I audible?
Yes, Mudit, you are.
Yeah. So, just wanted to highlight on the fact that you mentioned that you would be taking up some high margin career projects in the near future. Could you give some color on that? Like, how are they going to be? Like, are they going to be in a similar line of business in which we are currently, or they are going to be on a different line?
Mudit, I did not mention we are going to get high margin projects in VFX. I mentioned that the VFX margin will remain more or less the same, but the other verticals of ours, which is AI SaaS platforms, our brand jingles, and virtual production asset monetization on fab.com, as the revenue from those grow, which are technically very high margin services and products, that will pick up the margin of the company as a whole, because right now the revenue from those are not enough for the margin to, needle to move. But in the next few quarters, as the revenue from these verticals grow, that will pick up the margin of the company as a whole.
Got it. Thank you. And just one more question. I just want to understand how actually right now this industry works with respect to the TAM. How big is the TAM? And in the past 1.5 years, we have been facing some key challenges. How we are seeing through in the next maybe 2-3 quarters? Like, what do you see as the future outlook?
See, the global VFX industry is estimated to be around $9.5 billion. Okay, we are right now at a minuscule share of that. Nowhere, actually minuscule, not even countable. And I just mentioned a few, sometime back during my address that, industry studies and industry research papers estimates the animation and VFX industry to grow at a 12% CAGR through 2030. So we are looking at a healthy growth. Again, I would like to reiterate that what has happened in the last 12 months or 18 months is a unheard of, unseen of situation by any industry. It is like, thinking if tomorrow Maruti, Hyundai, Volkswagen, Mahindra in India decide to shut down production for 9 months, what will happen to the industry? Half of India will die. It's a very rare sight that you ever heard in your life that an industry has shut down for 9 months or 12 months. That did happen, unfortunate situation, but that does not change the fact that the industry is very large and growing really well. And now that the strikes are behind us, the content production has started in full force, and there's no reason why we should not witness good growth on an industry level. So, what happened was very unfortunate, and it's never happened to any industry in the world before.
Got it. And do we have any repeat client ratio in numbers, maybe? Could we get that in the PPT or?
I would really like to think that more than 80% of our clients come back to us very, very, very conservatively. It's rare. We've never had a client who's not given us work because our delivery was bad. Never. At least in the last 10-15 years, I can't remember. Maybe in the early years, we must have had somebody like that, but in the last 10 years, definitely not. I don't remember any client who's not. Secondly, what happens in this is that I'll explain how this industry works to you firstly. So when I say we're getting a project from Netflix, it's not really we're not getting really the project from Netflix. It may be a Netflix show. To make it simpler for you to understand, When I say I'm working on a Netflix India show, the project hasn't really come to me from Netflix per se. It will come from a Yashraj or a Dharma or a Balaji who's producing this on behalf of Netflix. They are the ones who give the concept to Netflix. Netflix greenlights it. Netflix is the one funding it for them, but they are the ones producing it, right? So that's what we call the production house. Our orders, even for a Netflix show or a HBO show or anybody that we do show, they come from production houses. There are certain production houses that do multiple shows, and they go on year on year. Dharma will do, they've been doing shows and movies for the past 25 years. Same with Yashraj, same with Balaji. But at the same time, you may come across one company, like a production studio, that has got one show greenlit from, let's say, HBO. They did that show and then they never produced anything after that. So while they may be a client of ours, but they will, since they're not producing another show at all, we lose them as a client, but we can't say we got the repeat business from them because they just haven't produced another show. So in our case, we're not really pitching to Netflix or an HBO. We're actually pitching to these production houses who produce shows on behalf of Netflix or HBO or Amazon or things like that.
Okay, got it. Thank you so much, sir. I think that will be all from my side.
Thank you, Murali.
Thank you. The next question is from the line of Rahil S. from Sapphire Capital. Please go ahead. Mr. Rahil, please go ahead.
Yes, am I audible?
Yes, Rahil, you are.
Yes, hi, sir. Thanks. So there's one question. Any acquisitions you have in sight for as a future growth lever? Because apart from you saying that the industry is in a revival mode, so is this just enough for us for the next couple of years to grow at this rate or more? Or do you think any other strategies like an acquisition or maybe key partnerships with more and more production houses, or anything else you could think of will be helpful to us and you have planned it?
Sure. So Rahil, let me give some perspective here. Right now, because of the threat of AI, not only the VFX industry or the media industry, any service industry in the world is confused on what's going to happen over the next 2 or 3 years' time. Whether you take a legal firm, whether you take, IT company, IT services company, everybody is confused on, how AI is going to impact, how are the governments probably going to save jobs if AI comes in. In our case also, right now it's very volatile. In a volatile market where the future of more than 2 or 3 years is not very visible and not very clear, we as a business house who've been in business for over 70 years, we've done multiple acquisitions across our various businesses. We understand when to acquire, how to acquire, and what is the right time. As of now, an acquisition may just lead to becoming a white elephant for us in the next 2 years if AI were to disrupt VFX. Following that white elephant after 2 years is more of a problem than a solution. That would then be a very short-term thinking that, next 1 year I'll gain a lot, my revenue will go up, my profits will go up, but after 2 years, what? We are not running DigiKore Studios as a listed company for a 2-year window. We have to think for the next 25 years, at least, if not more. So right now, we don't have immediate plans of acquisitions because, like I said, it could become more of a threat than, a puzzle for us. Because if, whatever reason, you acquire a VFX company, pay $10 million, $20 million, or $5 million also. You are acquiring also talent. You are acquiring a salary bill of probably $10 million a month. What do you do with that, which could become a potential white elephant if AI were to affect VFX? So we have taken the greenfield approach. We already have teams in Canada and North America. We are on the verge of establishing a subsidiary in New York. We are hiring teams out there on consulting basis. So that's working out pretty well to us. We want to grow. We want to grow at 30, 35, 40%, which we are on road to grow and which I do believe is a healthy, growth rate for CAGR for any company. But in the greed to grow top lines that 100% and 200%, we may just fall flat 2 years down the line. So we are going to be doing a wait and watch game for the next 6 months to a year, especially on the acquisition side, before we take any wrong decisions, which could impact us negatively after 2 years' time.
So don't you think like once business, stabilizes and then you have a sort of a good outlook, a little bit ahead into the future, let's say 2-3 years down the line or maybe more. So don't you think when you say that AI, are not sure how AI will, work for the industry and how it will disrupt or whatever, but then it's going to affect everyone, right? So don't you think an acquisition with a key value proposition, which kind of suits your business, will also adapt along the same lines how everyone will, and then be a sort of like a safe?
Rahil, you did not hear me sometime back when I said that AI will not disrupt VFX, just VFX, or it's not going to reduce the VFX. If AI were to disrupt filmmaking, it will disrupt the process of filmmaking altogether. So like you saw, like I just gave an example of Mahabharat recently, which Jio Hotstar has created. The whole series is AI. There is no filming. There is no VFX. It's not that VFX is reduced. There is no VFX in that. The whole series was AI. Now, we don't want to be sitting with teams of 100 and 200 people in the US and Europe where, the VFX is either reduced or disrupted. But yes, we are not averse to acquisition. Obviously, any company grows two ways, right? Inorganic and organic, both are there. Currently, we are looking at organic. Inorganic is not something we've never been averse to inorganic. Like I said, we own other listed companies. We have a listed company called Crore & Wild, which is owned by my family as well. That's a 25, 30-year-old listed company. We've done several acquisitions there. So we understand. So we come from a well-established business family. We know how to run businesses. We know when is the right time to acquire. What and why should we acquire, right? So acquisition is not just to improve turnover and profitability. There's got to be a strategic reason. There's got to be some strategic benefit to acquire. Either that company has, captive clients. Either it has some technology that will help. Because otherwise, if you're acquiring company just on the basis of their sales team, tomorrow if their sales team leaves, what do? You're left with nothing. Then you're acquiring it for the people, and people can move around here and there. So there's got to be some strategic moat, some strategic advantage for an acquisition to happen. But yes, we have our eyes and ears open. Not that we are averse to acquisition. It's just that we are not aggressively looking for an acquisition right now for the next 6 to 8 months at least.
Perfect, sir. Thank you for a detailed answer, and all the best to you.
Thank you.
Thank you. The next question is from the line of Garvita Jain from Seven Land PMS. Please go ahead.
Hello, sir. I have 2 more questions. One is, if you could please tell me what is the use of QIP proceeds we are going to have? Like, is this going to be only for working capital or any debt reduction we are planning? Because we have approximately 40 crores of debt in the sheet.
That's so we've already announced that earlier as well, Garvita. So out of the 45 crores we raised, around 5-7% goes in your fees and all of that. So let's say hypothetically we left with around 42 crores odd. 20 crores is what we plan to use for debt reduction, which will strengthen our balance sheet, reduce our interest cost substantially, which will then eventually also lead to a PAT increase automatically, because as your interest costs reduce, your PAT goes up. So to answer your question, 20 crores out of our fundraise is what we plan to use towards debt reduction, and the balance towards working capital, primarily towards, expanding our European and US presence in terms of manpower and production teams and sales teams and all of that.
Okay. And so how much is going to be the promoter's stake post QIP?
Okay. The QIP happens based on certain market, pricing. But yeah, to approximately give you an idea, promoter would be at approximately 48% post QIP. But like I also mentioned that immediately after QIP, the promoters are going in for a 20 crore promoter warrants. That is obviously an 18-month process, but that signals that the promoters are invested in the company. And as per our calculations, post promoter warrants, the promoters would be around 57%.
57%, right?
It's right now, I don't have that figure in front of me, so please don't quote me on that. But approximately, 56%.
Approximately 55-57%.
Post promoter warrants.
Okay. Thank you so much, sir. That's all. Thank you.
Thank you. The next question is from the line of Adish Pandey, an individual investor. Please go ahead.
Yeah, hi. Am I audible?
Yes, Adish, you are.
Yeah. Just one follow-up question to the previous one. So, by when do we expect the pledging percentage to, come down substantially? I know that some part of the QIP will be used for that, but by when do you foresee that coming down to zero, ideally?
Sorry, what percentage? Percentage of what?
The pledged percentage right now.
Oh, immediately after the QIP.
Okay. It will come down to zero, is it?
It's not really zero. Okay, I'll just tell you this. So we have two options out here. One is, so in the pledged loans that we have, one is a low interest loan, which is technically due in February, in which portion of the pledge is there. Some of the loans are high interest. Not when I say high, that means they're not like, for us, even 18 or 20 or 22% is high. So, yeah. So some of the loans are that. So those will obviously be knocked off first. Then we'll be doing balancing and checking whether it financially makes sense for us to carry that low interest loan and pay that off in February to unpledge that or unpledge it first. See, because pledged shares does not negatively impact the balance sheet of a company in any way. What we have to look at is what loans do we clear first that is going to impact the balance sheet positively. So any of the loans which have a higher interest than that one loan which has some pledge shares, if we need to clear those off first, we will. But in general, all our loans that involve a pledge get over by February 2026. So under any circumstance, by end of February 2026, we'll be, let's call it pledge free.
Understood. That is. Thank you. That is my only question.
Thank you. The next question is from the line of Pradeep, an individual investor. Please go ahead.
Sir, what is our current run rate of this Fabs.com and brand jingle and then this Kaise Banta Hai etc. Monthly run rate or quarterly, whatever?
So Fab.com, we are average doing, the last that I saw was around, so maybe 3 or 4 days back. We are doing average of 5 to 6 lakhs a month. Right now we've touched that. But that also we are doing with around 130 virtual production assets of ours. We have to upload another 120 odd virtual production assets, because when you say you have to upload, that means when we have created these virtual production assets for our platform, there is a certain method that they are created. When you have to upload them on Unreal Engine Fab.com, they require certain changes. So typically, our team is right now changing approximately 2 assets per day. So we are uploading 2 fresh assets on Unreal Engine per day. So assuming we were to finish the entire upload of the next 120 assets in the next 3 months' time, so by the end of December, we should be comfortably touching a revenue rate of around 10 to 12, maybe 15 lakhs a month from Fab.com. Today we are doing around, like I said, 5 lakhs odd per month from Fab.com. Brand jingles, we are currently averaging between India and UAE at an average, for that I'll give you a weekly average actually, not a daily average, but yeah, so within that it's more of a weekly average. 50,000 into 7. Around 3.5 lakhs a week is what we are doing in terms of brand jingles currently between India and UK. And this is growing substantially because this is a very simple logic business where we are advertising on Instagram, getting an inquiry and closing those inquiries. You'd be surprised to know that we are actually experiencing an ROAS, that is return on ad spend, of anywhere between 6 to 8 on brand jingles, which is among the highest in the industry. Online businesses, if they get even 3 or 4 ROAS, they're very, very happy. So that is the impact of our advertising, and we do believe we have the right strategy to reach out to potential clients. Does that answer your question?
Yes, and कैसे बनता है and this.
कैसे बनता है? Shows are not monthly. So we open up a season. So typically we've just filmed 20. So we've locked in 30 clients for कैसे बनता है. So our shows, how that work, how the payment terms for our shows work is 25% the brand pays us on signing up with us. 50% they pay us once the shoot is complete, and 25% they pay us once the show goes live on Jio Hotstar. So it's not really a month-to-month this thing. I can't say okay, this month, so it fluctuates. Certain months we close more brands in our shows. Certain months we close some lesser brands in our shows. So so that is more. So this year we should do a revenue, DigiKore revenue of around 10 to 12 crores odd from our branded content shows.
And one more question. So out of this, I think 50% at least will be in H2, correct? 10 out of.
I'm sorry?
Out of this 10-12 crore, the 50% will be in the H2?
Partially, actually no, we haven't done. So a lot of now, so let's say the first 20 episodes of Heroes that have gone on air in last week, even those episodes get 25% will come in H2. So we have done a little less. It's not 50-50. It's not H1 versus H2 50-50. If you're doing around, let's say, to make it simple, if you're doing around 10 crores worth of revenue in the financial year, percentage-wise, you would have booked around 40% of that in H1. So in H2, the revenue will actually be a little more.
Okay. And one last question. What is the impact of this Trump tariff? So is it happening or currently what is the impact?
Trump tariffs cannot be applied to services, firstly. There is no way you can tariff services. So, everybody...
Indirect impact.
So right now we have no indirect impact on the business at all. Zero is indirect impact. We also briefly mentioned about tariffing Hollywood and productions that are filmed outside, which is nonsense. Technically, you can't do that. There is no system in the world that will allow him to do that. So that was one day he woke up, from a dream and said that, and we all know how Trump is. He can, say anything. So yeah, but that's not going to technically and even system-wise, it's not possible to tariff services. So that won't happen. And indirect impact on the current tariff, nothing has happened so far.
Okay, sure. Thank you.
Thanks.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. A reminder to all the participants to press star and 1 to ask a question. The next question is from the line of Prabhat Kumar. Please go ahead.
Hello, sir. Congratulations for a great set of numbers. And my question is regarding that, why are we expanding or why are we focusing more on Europe segments? Are we getting more contacts from there? Because recently Phantom has, opened their studio or whatever office in China. And recently a movie in China has crossed, I think, more than 16,000 crores. So are we also thinking in that direction that we should open our studio or office in China, or is there any adverse impact for us?
No adverse impact, definitely. We've US, we are already well entrenched. Now we are spending the next 3 to 6 months in entrenching and getting in substantial business from Europe, because Europe is a much larger pie when it comes to VFX than China, for sure. It's the amount of work we can get from Europe, we may not get even 1/5 of that from China. B, we have worked on Chinese productions in the past. They are very much like Bollywood, where the margins are extremely low. We've worked on several Chinese films and several Chinese shows in the past. So not that we don't look at China as a market, but honestly, it's like Bollywood. The margins are extremely low. But yes, after our Europe focus for the next 3 to 6 months, which we have, our next absolute sprint, like we call, what we call this whole Europe thing, is a 6-month sprint where we are going to go, bang on and go all guns blazing into Europe. Our next sprint is going to be Asia, which is not really just China, because if you ask me, bigger than China, the opportunity for India lies in South Korea. The South Korean content market is booming. South Korean dramas, the South Korean shows, the South Korean movies and TV shows, they're absolutely booming. So South Korea and China are markets. South Korea definitely pays better than China. So we are more going to be aggressively targeting South Korea because we want to go into margin businesses, not just value, but also, bottom line should not suffer.
And so my next question is that, are we also going to, because we are more focusing on Europe, so if there is any way, because of Trump tariffs, our revenue is going to suffer, or are we, our focus is on USA also or not? So
see, US, obviously we have a focus, but like I said, we are going aggressive on Europe. In fact, our goal is to, so far almost 100% of our revenue used to come from US. Now we've come to a sizable revenue from Europe, and by the end of this year, I would like to think that Europe would be equaling US in terms of revenue mix for us, which is very important. Now, whether the tariffs impact will impact us, not impact us. See, the only way the tariffs impact can impact us is if US goes into a recession. Now, if US goes into a recession, everybody will get impacted, not just our industry. So, just by tariffs, there is going to be no impact on the film industry or VFX industry. But if the US were to go into a recession for any means, then the whole world will get impacted. Every industry in India will get impacted, not just VFX. But we are already protecting ourselves by going very strong in Europe, by diversifying into our other verticals like branded content, AI, SaaS businesses, and all of that. So we are doing everything it takes to create a moat around the company and reduce our dependency on the US market, US VFX market.
Okay, thank you, sir. All the best.
Thank you.
Thank you. Ladies and gentlemen, that was the last question for today. We have reached the end of the question and answer session. I would now like to hand the conference over to Ms. Ruchika Shah for closing comments.
Thank you. And on behalf of DigiKore Studios Limited, I sincerely thank all our investors and analysts for taking the time to join us on today's earnings call. Your trust, interest, and continued support mean a great deal to us. We look forward to growing stronger together and keeping you well informed on our journey ahead. Thank you, and once again for being a valued part of our story.
Thank you, everyone. Really appreciate the time that you spent on the call. It must have been a busy day, so really appreciate the time you took out. Thank you, everyone.
Thank you. On behalf of DG. Yes, sir, please go ahead.
No, sorry, I'm good. Are we okay to disconnect now, or?
Yes, sir, okay to disconnect. On behalf of DigiKore Studios Limited and Equibridge Advisors Private Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
If you found this video helpful, please like, share, and subscribe to Concall India for latest upcoming Concall.